And this is Real Estate Underground.
Greetings and salutations, Real Estate Undergrounders. This is Ed Matthews with the Real Estate Underground. Thank you so much for joining us today. You've heard me talk about stalking people on Twitter and LinkedIn and elsewhere. And, one of the things that I have recently rediscovered is Twitter. And, I had kind of gotten off Twitter mainly because of, I referred to it as the cesspool of social media. And, the reason being is that, from all the politics and vitriol and all that, it was just bringing me down. And so the reason that I started to pay attention was Elon Musk, bought it. And I thought, all right, well, let's give it a second chance. And a lot of the capability and a lot of the content, allowed me to curate the subjects and the people I wanted to listen to and learn from. And today I'm really excited to introduce Nick Huber, Sweaty Startup, Bolt Storage. I'll let you talk about your podcast, but Nick, welcome to the show. And thank you for joining us today. And thank you for all the information and content you've been publishing lately, because I've learned a lot.
Ed, thanks for having me. I had a very similar view of Twitter. I almost didn't join it. A friend had to really nudge me twice,
right?
Because he said, Nick, there's deal makers on Twitter. Like, this is where you learn and you can get to know other people that are like us. And I'm like, no way, man. People go on Twitter to argue about politics and just make themselves feel like crap.
Right.
But then I got on and I realized that there's subsets in Twitter about small business, about management, and about real estate, where you can mute and block and get a lot of things out of your feed, and you can hang out with unbelievable people. And you and I can talk about how Twitter has changed my life, but it's a resource.
Yeah, without a doubt. I mean, I don't care who you voted for, and I don't care why you voted for it, and I don't care why the other guy's bad. What I care about is the value system upon which you base your business, the process and procedures and systems you put in place, how you go to market, how you serve your customers, and a whole bunch of stuff in between. So I'm glad we discovered each other, and welcome. And let's get into it. So for those of us who have not stalked you, why don't you tell us a little bit about you and your business, and then we'll get into the details.
I'm 33 years old. I live in Athens, Georgia, with my wife and 5, 3, and 1-year-old, 2 boys and a little baby girl. In 2011, as a junior in college in Ithaca, New York, I started a pickup and delivery student storage company, a moving company. It was a really hard business. We grew that company. In 2015, a couple years later, we were 4 full-time employees doing a couple $1 million a year of revenue. And we were making a couple $100,000 a year with a big team in 12 states, 25 colleges, and a big part-time team of 200 plus part-time employees who would work during the busy move-in and move-out season. I learned a lot about that business, and it also gave me what I believe is the lifeblood of real estate, which is cash.
Yeah.
You have to have a lot of cash to get into real estate. In 2015, we decided to build a self-storage facility from the ground up in upstate New York. I went from dinner table to raise the money to get that deal done. Me and my business partner put in $500,000 of our own dollars to build a self-storage facility for $2.9 million all in after we went over budget, and you know how development is. 2017, we got the doors open on that building, and fast forward to 2019, 2 years after we opened it, we did a cash out refinance at a $5.2 million valuation. Fast forward to 2021, the thing was doing almost $100,000 a month of revenue. We did another cash out refinance, and we bought out our partners at an $11 million valuation. And that one deal changed my life forever. It showed me just how much money you can make in real estate. It showed me that I needed to get the heck out of my moving and storage company, which we did. We sold that in 2020, and then we started buying more storage. We used the proceeds from that. We bought 3 more buildings in 2018, 19, and then a couple more in 2020. Then in the middle of 2020, I got on Twitter, started meeting like-minded people. I was at a point in my career where I could not raise any more cash. I wasn't a country club kid. I'm, surrounded by hedge fund managers and wealthy people. Turns out my dad, to invest in that very first deal, took a mortgage on my childhood home, and I didn't know it. I'm glad I didn't know it looking back. But so I was out of cash. We needed more cash to buy more stores. We were finding tons of opportunities, but I couldn't raise the money. Got on Twitter, started being radically open about how we do business, how I buy deals, how we find deals, how we think about real estate, how we operate self-storage. I was radically open. I was showing pictures of my profit and loss statements and things like that on Twitter.
That's what caught my eye.
And soon a lot of people started following me and reaching out in the direct messages and setting up meetings, and we got face-to-face on a video call just like this, Ed, and we were able to raise some serious money. At the end of 2020, we bought 4 more buildings, raised $5 or $8 million from $5 to $8 million, somewhere in there, of investor capital from Twitter only. 2021, gangbusters. It was on. My company grew in 2021. We grew from 6 employees to 45 employees that year. We bought $50 million worth of storage. raised 23 million from outside investors, 99% of which came from Twitter. Built a full real estate private equity company. We manage all of our investors. We raise the money ourselves. We manage all of our debt relationships. We manage the actual asset with a team of 45, 20 of which are in the Philippines and 15 of which are in Colombia. We hire and employ all over the world. We can discuss a little bit of the advantages of that. But
yeah, you bet.
2022, my following just kept growing, but the real estate market started to really get harder. Interest rates went up. We stopped, buying as many deals. We went from buying 50 million in 2021 to 30 something million in 2022. And so far this year, we're halfway through 2023 and we've bought one deal for $1.2 million. But my team is intact. We're sustainable. We've got the right fees in place to, manage through this downturn, which I think is really important. I've kind of gotten interested in other areas of entrepreneurship. I've invested in and co-founded seven other companies since that day and having a lot of fun. And I think we go back to kind of Twitter, but it changed everything.
Yeah. So I want to unpack all of that, but we're going to do it one at a time. So as far as the let's talk real estate first. So, you mentioned that real estate is heading for a downturn, and, whether you talk to, the truly optimistic or the truly pessimistic or someone in between, it doesn't sound like there is a lot of question about whether a recession is coming. It's just when. Right. And how deep. And so, I know you've got some pretty specific and hardcore views on what's happening. So, why don't you walk us through kind of what your viewpoint is of the market, particularly in commercial real estate, and then we can talk about that.
So first of all, I think anybody who predicts with certainty when it comes to real estate, interest rates, the economy has
it's completely full of it.
It's crazy.
Right.
So when you're listening to me, just take all this with a grain of salt. Yeah. I don't know what's going to happen. My job as a real estate GP, as a sponsor, is to protect capital. We've been very blessed that a lot of our early deals are worth a lot more money. We had a great 2021. Early 2022, or actually middle of 2021, we made the decision to stop using as much leverage. We dropped our LTV at acquisition from 60% to 50%. Nice. And now we're buying all cash. So we're not in a situation where we have some super stressful debt maturities coming up where we're scrambling. But that said, my net worth has grown quite a bit. We have a lot of investor capital under our roof now, and I'm in one mode. I'm in a different mode than I was at the very beginning. In the very beginning in 2017, I was risk on. Like, I needed to make money. I had not a lot to lose. Right. Now I have a lot to lose, and I have a lot of investors trusting me. So I'm worried about one thing: protecting the downside. Like, my job, my investors don't pay me the big bucks to be bullish and go out and buy everything and right. fly by the seat of my pants. My investors are paying me the big bucks to make sure that we don't lose any properties and manage this real estate well through the downturn. So do I think a severe 2008 level real estate recession is coming? I don't think so. I think 30% chance if I was a gambling man, which I guess I'm in real estate, so I am, but I think a 70% chance here is that interest rates start to tether back and some sponsors get blown up, but business as usual for many of the families and groups of people that are holding real estate for the long run. 2021 was a crazy year. A lot of people overpaid. Beginning of 2022, a lot of people overpaid. And yes, there's severe stress going on right now.
You bet.
I always talk to the debt brokers. I talk to the debt brokers to get a real beat on the market, because they're the ones interacting with the sponsors trying to find debt, and they're interacting with the banks lending. Regional banks are getting really hurt bad. The executives are saying, hey, we got to get some of these loans off of our balance sheet because our deposits are shrinking. And if a debt crunch happens at the regional bank level, it will crush commercial real estate, because nobody wants to go to CMBS. Nobody wants to go to life insurance. All of our loans are with regional and local banks. So if those banks pull back and they can't loan anymore, it's just going to cause a lot of pain in what we do. So yeah, if interest rates stay here for another 18 months, total chaos. Yeah. Total chaos. Because I know that these, unlike residential real estate, commercial real estate is on 3, 5, 7 year terms. Right. And a lot of them are balloons, and the loans mature, and you have to find additional loans. People think in 2008, everybody went broke because their cash flow went away. That's not true. People went broke because their loans mature and they couldn't find placement. So that's happening right now. There's a lot of sponsors in the weeds, stressed out as heck right now, trying to replace debt on properties, and they can't do it. A couple of days ago, it was released that Prime Storage, one of the big players in our game, they're syndicators and a big fund, that they bought 300 really nice properties over the last couple of years. They just went to CMBS $400 million at 6.15% on a 10-year loan. Right now, in this market, they went to CMBS north of 6% on a loan for $400 million. The defeasance on that 5 years from now is going to be absolutely insane. They would not place debt at 6% with CMBS unless it was serious stress. Right. So that's just a sign. That's a sign that even the big, well-capitalized groups are starting to feel the pain. And also the economic trends in self-storage are not that that great. And I know multifamily in a lot of markets, rents aren't going up anymore. Nobody's moving. Velocity of new tenants is very slow in self-storage right now because a lot of people rent storage units between moves. So it's a very interesting time. And yeah, I think the real estate market was kind of due for an event that separated the men from the boys. I mean, we had 13-year run where nobody lost money because property values only went up.
Hey,
so
everybody was a genius.
A lot of people in the real estate game that are maybe not that good of operators. So
yeah,
and we can talk about running a business, but real estate is a business. And if you don't know how to manage and run people and keep properties clean and lease them, then it can become a nightmare really quick.
Right on. Yeah, it's, it kind of drove it home for me when I was on that. I was listening to the replay of a Moody's forecast for 23, and the economist on there said that 23% of the loans that were maturing this year were not going to be refinanced, and that bloodbath to ensue. And it's interesting.
Oh boy.
Yeah, I mean, one data point, right? And so I got curious and started talking with some of the loan officers and executives at our regional banks here in Connecticut, and I sat with the folks at Liberty Bank and a few others, and said, all right, how true is this? And to a person, they said it could be catastrophic if rates stay where they are or go up over the next. I think it's probably 18 months, but just based on what I'm hearing. But like you said, I mean, if I'm going to predict where the interest rates are going to go, we're all going to be in trouble because I guarantee you I'm wrong. So in terms of leverage, I think that's a valuable lesson for a lot of the folks listening here, is that there's been so much dumb money on the street here in the Northeast where I am. You used to be able to buy a building at an 8 cap, which would cash flow very nicely, right? And was a fair price, and you could operate the business responsibly, have the right reserves, and be able to serve your residents. And then the game is resident retention, right? Once you get them into a unit that is clean, safe, and upgraded. And then what started happening pre-COVID, even I'd say 19 into 20, is that there was a massive amount of I've in the background, I call it the bigger pockets effect, right? That it's that everybody wanted to get into real estate, and everybody was throwing money at it, and they started buying stuff at 4 caps, 5 caps, 6 caps, and they thought, well, I'm getting debt at 3.5%, so it's going to be okay, we're going to be fine. Not understanding that this is like everything else is a cyclical business, and interest rates go up, rents go down, and if you don't understand that, whether you're in industrial, self-storage, or multifamily or something else, that is an economic reality, and usually the cycle is about 7 years. So good luck if you're buying at a 4 cap and your debt's at 3.5%. Clock's ticking, you're a dead man walking, you just don't know it yet. And so it's interesting. So let's talk about, you and I kind of share, not knowing this until I really started to dig into your Twitter feed. You and I share a lot of similarities. I'm a process and technology guy, so I'm always about process and procedures and enabling technology, and leveraging teams and technology to create force multiplier, right? And I fundamentally believe, being a former recovering techie, that technology, if used correctly, is a force multiplier, right? And so I'm curious about two things with technology, with process. One of the things that I was always prone to, and I have to really guard against, is creating complexity out of what should be a simple process, right? I don't know if I was trying to prove to myself how smart I am or what, but I found, and I think you agree with this, that simple, clear, always better. Right. I think I remember reading one of your blogs about, your business process should be like a simple email, right? 90 words, keep it simple, get in, make your point, get out, right? So anyway, I'll let you comment on that.
As an entrepreneur, we thrive in chaos. We thrive with constant decision making. We thrive with unstructured. We thrive making decisions and not knowing the outcome of those decisions. That's an entrepreneur mindset. And an employee has a mindset that's a lot different. An employee has a mindset of, hey, I've been taught my whole life that if there's a problem, I turn the page back 3 pages and I look up the answer to that problem. Right. Since public school days and college days, and now at my job where I have a task to do, I can turn back and I can look at the answer, and I have a structure and I have a clear way to do things. Most corporations, large corporations, that's the way it is. It's a simple way. Put your butt in the seat, and this is how you succeed at this job. This is what you need to do, and this is the deliverables, and this is what you need to do. Small business owners like us, we think that everybody thinks like us. So when I hired my first 5 employees, I thought that everybody liked chaos. Everybody liked decision making. People wanted autonomy. And you hear all the advice on Twitter and all over social media. You hear like employees want autonomy. Employees want to make their own schedule. Employees want a different day every day to kind of have excitement and new things. That is all bullshit. Like employees want to be told how to succeed. They don't want chaos. They don't want constant decision making. They don't want uncertainty. If they did want those things, they would become entrepreneurs.
Right on.
They wouldn't be going to you to pay you every 2 weeks. Right. So it was a mindset shift for me that, hey, I thrive in chaos. I like making decisions. I don't care if tomorrow is totally uncertain for me. That's who I am. My employees, they want a very stable workplace. They want reliability, and they want me to tell them how to win. So I came into real estate from running a really hard small business with tons of moving parts. And back in 2013, that small business was growing and we were hiring people. And me and my partner, at the end of every workday, we'd be sitting in a room, crack a beer open, and we would just complain about how our employees were incompetent. They weren't making good decisions. They didn't care about our business. They were costing us money all over the place. The next year, and one of the days, my partner and I, he looks at me and he goes, Nick, it's our business. We need to take ownership over this. Like, we can't just blame our employees all day for being bad at what they do. It's our job.
Right.
And we looked and then we kind of dove in. We got some really good advice from some mentors. We dove into what they were needing to do, what our employees were doing. Turned out we needed them to do about 30 different things to do their job well. Their days were complete chaos. There was unstructured. They needed to create invoices. They needed to do customer service. They were making schedules. They were unloading trucks. They were counting items. They were labeling items. They were taping boxes. They were moving boxes. They were driving trucks. They were navigating. They were doing all these different things. And we realized that, oh my God, when you tell an employee to do 30 different things well, they're not going to do any of them well.
Correct.
They can't. And so we installed structure. We took a lot of tasks off their plate. One of their big part of their jobs was creating an invoice to collect the money. And we were having our drivers, our movers, create an invoice to collect the money. Probably not a good thing to be doing. So instead, they just took a picture of all the items. And the picture went on the computer, on the internet, and it went to one person on one desk in one table who did all the invoicing, and they got really good at that one thing.
Right.
Then it was like, we had them making the schedules. We had them making the schedules the next day. But in reality, one person at one spreadsheet on one computer can make all the schedules at all the companies and get really good at making the schedules. Take that off their plate. Maybe they shouldn't be unloading the truck. Maybe the guys that are good enough to go out and service customers shouldn't be at the warehouse unloading the truck. Let's get 2 different crews. Let's separate that. And we got it whittled down to about 5 things they needed to do well. Drive the truck, label all of the items, tape all the items, and put it in the back of the truck. No customer service. When a customer asks some questions, hey, I don't know the answer, call this number on this card. And when we simplified their job down to that level, and really set up some structure and system around it, amazing things happened. Our business doubled from 2013 to 2014, and it was less stressful. We made twice the money and it was half the stress. And that's when my mind exploded and it opened up to me that, hey, employees want to be told what to do. They want you to give them the tools to win. And too many business owners are running around looking for, I call it like unicorns. You're looking for people who care about your business the way you care about your business. They're people who can make decisions like you can, and people who can do the job as well as you. Those people do not exist. You have to build a business where normal people can come into your company and execute and do things well. And the employees want that too. They want to be told what to do. They want to be told how to win, and they want to just succeed and make customers happy and be treated with respect. And then they want to go home at 5 o'clock and watch Netflix.
Yeah, right on, man. There's a reason why, only 2, maybe 3% of the world's population own businesses, right? And the reason being is that everybody else just wants to go to work, do their job as well as they possibly can, go home, and like you said, watch Netflix and hang out with their kids and their wives, and go have a life. And the one thing that I heard you say, which really resonates with me, is that I always talk about passion players and paycheck players, right? And when I talk about passion players, who are the folks that I hire, it's not that they care about my business as much as I do, because no one will, right? It's that they care, they take pride in the work that they do. And that's a huge difference, because when I had a company years ago when I was much younger, I expected everybody to care about the business like I did. And I was absolutely shocked and appalled that they didn't. So one of the things that I think I've heard you say, is that, our job as a business owner is to make average, a normal person, an average person who brings, an average capability to the table. Our job is to help them succeed. And, that kind of dovetails into what one of my mentors, Rob Bernstein, had always said. He is the CEO at a software company I used to work at. And he said, every penny we spend on human beings is an investment, and I expect a return on that investment. And the only way to do that is to keep it simple, so that everybody understands exactly what they have to do, right, on a day-to-day basis. And I'll take it one step further. It not only is it understanding what their job is, but it's also communication. Right. And I think you've talked about this as well. I'm a huge fan of Tony Robbins, and, I learned the value chain process years ago with him through him. And, it's not just, hey, Nick, I need this. It's, hey, Nick, I need this for this budget in this time frame. Confirm back to me you understand, and confirm back to me that I'm telling that you can do what I'm asking you to do. And it's that value chain that is the basis of, pretty much all the successful businesses I've seen, because it eliminates surprises. It eliminates, I'm a stress guy too, right? I look at, on a quarterly basis. Okay, all right, team, what's stressing us out, right? And we either, we fix it in one way, shape, or in form or another, right? It's either we delegate it, we outsource it, we automate it, or we just stop doing it. And so, that exercise is similar to what you're talking about, is that, you start here and you slowly but surely funnel it down to, the main thing. Keep the main thing the main thing. And if in your business it's 5, and, in my business it's probably 7 things. And everybody owns, their specific piece of it. They're crystal clear on it. And there's no ambiguity. And I know that it works because, a couple of months ago, I had an appendectomy that I was not expecting, and I don't recommend them. They're not anywhere near as much fun as people say they are. And I was down for, the better part of a week. And my wife caught me negotiating a contract on my phone as I'm sitting on the gurney in the emergency room. And I fell asleep, and she took my phone. And I woke up. I'm like, hey, where's my phone? She goes, yeah, I took that away. You're not getting that back. And so I was completely disconnected for a week, thinking, holy crap, my business is going, I'm going to come back to a smoking hole. And, lo and behold, I show up, 7-8 days later, and all the residents were cared for. They all paid their rent. The contractors got paid. The utilities were paid. All the work orders were managed properly. All the social media went out just as it was supposed to. Podcasts got produced and edited, produced and published. I'm like, wow, okay, cool. Mission accomplished. They don't need me anymore. I mean, they do.
Proud moment.
But yeah, well, no, it was a whew moment, right? It was a huge relief.
That's a sign that you're running your business well. That you should be proud.
Yeah.
That's good.
Yeah. I was proud. But
You mentioned thought a lot about what stresses me out personally, and it's always the gap between what somebody expects of me and what I'm actually delivering them. The gap between expectations and delivery is what stress is for me. So the best way to keep people from getting stressed out is to over communicate the expectation and manage expectations. People don't talk enough about managing expectations. All day, I tell the 2 contractor story, right? There's 2 contractors. One contractor is going to tell you, oh yeah, we're going to get that done tomorrow, and we're going to be right on this budget, and I'll be here at first thing in the morning. And the other contractor's like, you know what? I got some things outside my control. I don't know when the wood's going to get here. I don't know when my plumber is going to get freed up from a job he got pulled to. And if we're being honest with each other, I'll probably be able to get here to start within the next 2 weeks. There's one contractor that knows how to manage expectations, and there's one that's going to overpromise and underdeliver. Which one do you think is stressed out, running around all day, putting out fires? Right. It's the contractor that doesn't know how to have the hard conversation at the beginning. Like you have 2 opportunities to have a hard conversation. You have one opportunity at the very beginning, and you have another opportunity after somebody's already all up your butt because you're not delivering what they needed from you.
Right.
It's way, way easier to have that hard conversation at the very beginning and save yourself from 3 to 5 hard conversations down the road.
Right.
So, and in my company, we have an email rule in my company. You get off the phone with a contractor, you get off the phone with a vendor, heck, you get off a meeting with another employee. And there was something discussed in that where they need to do something and you need to do something, and you're expecting them to do X, Y, and Z, especially when it's for a dollar amount of money. We're going to follow that up with an email right away. It says, hey, just wrapping up our call to make sure we're all in understanding. You are going to do bullet, 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 and I'm going to pay you this amount of money. And I'm going to pay it to you on this schedule, bullet, bullet, bullet. And you'd be very surprised that you just got off the call with a contractor. You just had a very clear conversation about who's installing that toilet and when. But he calls you up and says, whoa, 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 the plumber's going to do the install. I'm not doing the install. That is not in my scope of work. The written word is so critical because in a conversation, you're talking, and while the other person's talking, you're thinking about what you're going to reply.
Yep.
And a lot of stuff is missed. When you have a half an hour conversation with a contractor, the moment the phone is hung up, that contractor has forgotten 2/3 of what you've said.
Right.
How can they possibly remember? How could they possibly remember the 3,000 words that you said in a half an hour conversation? So critical to over communicate, especially when it comes to expectations, so that you reduce the amount of stressful situations, because it's very clear to both sides who's doing what on what timeline.
So it's clear to me that, you've had a lot of people in your life who have given you really good advice. And so I'm curious, in terms of the folks that have mentored you over the years, what is the best advice you ever got? And frankly, who gave it to you?
Well, when it comes to syndicating and buying real estate, I got some advice from a friend of mine, Chris Powers, who runs Fort Capital in Dallas, Fort Worth, and he's a Twitter personality, and he's built an amazing business. I'm talking about they've acquired over $1 billion worth of industrial real estate. He has a team of over 100 people. He's a couple years older than me. He's 36 years old. It's incredible. He told me very early on in my real estate journey that I needed to build a sustainable company from a fee perspective. He said, Nick, very early on, you're doing your first couple deals, you're raising money for the first time. You're going to have LPs that want you to do work without fees. They're going to beat you up on your fees that you think you can charge. And number two, you're going to think that's warranted because you don't have experience, and you might as well not charge a market management fee, or remove the AUM fee, or maybe the acquisition fee needs to get removed, or maybe there's no refi fee or disposition fee. All the work that you're doing as a real estate syndicator when you're raising outside capital, it's natural when you're early on, when you're starting out, to just discount those fees. I need to get paid if everybody wins. We're in the promote together. He told me all this at the beginning of 2021 before we bought $50 million worth of storage, and I pushed back to the LPs that said, hey, Nick, your acquisition fee is too high. Hey, Nick, your 6% of revenue management fee is too high. Hey, Nick, your refi fee is too high. Hey, Nick, your AUM fee of 1%, we got to get rid of that. I pushed back on all that stuff, and now here we are in the middle of a recession where we stopped transacting, and I can afford to pay my people. I have 1.3 million a year of payroll in my company, which if I were 100% in America, it would be $3.5-4 million because I have 45 people. But I can pay them, and my management company, of course, it's not sending my kids to private school. It's not a big profit center for me, but I'm charging 1.5 million in management fees, and I'm bidding out 1.3 million to pay my people.
Right.
That was just the best advice that I ever had, because in order to attract and retain and hire and keep great people for the long run, you have to charge fees. If you're doing work, you have to charge fees.
Yep.
And good LPs, the wise LPs, know that investing with a sponsor who's getting strangled on fees is not a wise deal, because when the recession hits, when they stop transacting, how are they going to pay their people? Then they start neglecting the property. Then they're taking shortcuts, and that's how an entire real estate portfolio can come unraveled. So that was really good advice. And just advice in general, I get advice from everybody. There's a lot of people out there that say, Nick, why would you take advice from people who haven't been there, who haven't done it? And yes, there's a ton of armchair quarterbacks in this world that'll sit back and tell you how to live life when they haven't done anything. They've never run a company. They've never hired anybody, but they'll sit on Twitter and tell me that even though I've hired 300 people, that I'm doing it wrong.
Right.
Like that's natural. So yes, I weigh the advice that I get based on the outcomes that these other people have accomplished. But there's also the truth that there's a lot of extremely accomplished people, especially in the real estate world, that are just average Joe. And look, when you're in entrepreneurship and you're putting yourself in the game, there's 500 decisions that you have to make. And if you make 100 of them right, you're going to get rich. Like there's a lot of dumb people who have made a ton of money in real estate. I'm one of them, right? You don't have to be spectacular to get rich in real estate. And that's what I love about it. That's why it's so approachable, because it's simple. That said, I'll get advice from everybody, and I'll just throw out the stuff that doesn't apply to me. There's not a single person that I follow on the internet. There's not a single mentor of mine where every single word they say I'm going to hang on, and I'm going to treat it as the gospel. Everybody, I'm looking at what they say, and I'm saying, does this apply to me? No, it doesn't apply to me. I have a different perspective. I'm going to throw that out, and I'll take what works for me, and I'll throw out what doesn't. And it's worked really well for me. I've gotten phenomenal advice from my 86-year-old grandfather who never ran a business. I get just the street smarts, and it turns out that decision making, it's all decisions. All of life is just a decision of which way you're going to go. This decision making is extremely nuanced and extremely difficult, and there's so many different factors involved that there's no one way that everybody can do things. If you read Elon Musk biography, and you're trying to model your business career after Elon Musk, you're going to have a rude awakening when what worked for him doesn't work for you. Yeah,
not everybody can create billions of dollars in net worth, and when you're the founder of PayPal, in 98 or 97, it's very helpful. It's very helpful when you need to dump $10 million into Tesla to keep it cooking.
Yep.
When you've got $1 billion in the bank, it's okay, right? So you mentioned Elon's biography. I'm always curious leaders are readers. They tend to be, right? And so, these days that can mean physical books or audio books or, YouTube videos or podcasts like, yours or mine or another. I'm curious how given that you have a lot of things going on, right? And so I don't imagine that, you're putting on your smoking jacket and slippers at 8 o'clock after the kids go to bed and sitting down with a book. I imagine it's a little more chaotic than that. So I'm curious how you consume information and also I'm also curious about who you're paying attention to these days.
I love reading, and I think that there's so many business minds out there that just the books that I've read in the past that have shaped me is really amazing. I could kind of go through a couple of books that I really like. I love Seth Godin. I love EntreLeadership by Dave Ramsey. Goal by Eliyahu Goldratt is a really good book about bottlenecks and getting people through. But I'll kind of take the other side of this and some advice that most people probably wouldn't hear. And it's perfectly applicable to somebody who might be listening to a podcast or watching a clip of mine on YouTube or something like that, is that delegation, management, entrepreneurship, business, it's not really a science. It's not a science. It's not something where you can read a book on it and it's an algebra. You're reading a chapter on algebra and you see a problem and the answer to that problem is 2 pages back. Business is not that way. It's not as straightforward. There's 200 factors that are influencing every decision. You never have complete data. You never have complete data to make data-driven decisions. But I think so many entrepreneurs or people who want to be entrepreneurs come from an analytical background. They come from a science background. They come from a data-driven approach background where, hey, in order to make a decision, I got to have all the info. And in business, there is no situation where you have all the info. Right. Okay, I can go see a property. I can feel a property. I can look at the rent rolls. I can talk to the owners. I can study the market. I can do all these different things. And at the end of the day, I don't know if I'm going to be able to charge the rent I want to charge and how many people are going to move in and move out when I buy the building. I just don't know what's going to happen. So many entrepreneurs, they study, they read, they analyze, and they feel a sense of productivity there. Like when I buy a business book, when I click purchase and it's on its way to my house, I get a sense. I get a sense of accomplishment.
Sure.
In reality, that can kind of handicap your propensity to get things done. If you think that studying and reading, because there's an unlimited amount of Nick Hubers and Eds and people who are teaching people about entrepreneurship and we're writing about business and we're writing about management. In reality, those things they're not sciences, they're arts, and the only way to get better at it is to practice it.
Right.
Okay. I've been using a weightlifting analogy a lot lately. It's, hey, you want to get stronger, you want to build a muscle, you want to build this bicep up, you want to make it bigger. Are you going to read about building biceps? Are you going to watch Arnold Schwarzenegger's documentary? Are you going to spend a bunch of time building this whole fitness plan? Or are you going to go to the gym and pick up a freaking weight?
Right.
Okay. Business is the same way. Like I see way too many people who they don't have a business. They've never tried to sell anything. They've never tried to hire somebody. They've never been in an uncomfortable situation when it comes to money, finances, or starting a company, but they've read 400 business books. What the heck is the point of that? Like, there's one way to get better at business, and that's doing business. And once you're in it, this is an amazing thing that happens. Once you're in it, once you're in the thick of it, once you're doing business, then those business books start to make sense.
Right.
Those books are like, oh my God, I can actually apply this to what I'm working on right now. If I got a company and I'm selling customers and I have 5 employees and I'm trying to build something, then I'm reading a business book. I'm like, whoa, all this is applicable to me. I can apply.
Right.
Oh, that doesn't apply to me. The Elon Musk book about how he's, investing and trying to save SpaceX. This doesn't apply to me. But oh wait, Dave Ramsey's principle on delegation in this book right here, when he's talking about problems and bottlenecks in a company, and he uses the monkey on the back analogy, which I love so much. I can apply that right now. I can go back to my office in the morning and I can apply that. That's the difference. Yeah. So like if you're listening to this podcast and you're getting a sense and you're getting a dopamine hit and you're feeling productivity by listening to me talk and me and Ed riff on businesses and talk about our own companies, it's just a super comfortable place to be. Business is uncomfortable, period. Like, it's very it's comfortable to study business. It's comfortable to read about business. It's comfortable to think about all the data that you need and doing the market study and analyzing the properties and underwriting things. All that is super comfortable. Going out and signing a personal guarantee for $3 million as a 25-year-old, that's not comfortable.
Yeah, and there's a stat that I've heard, and I've since kind of proofed it out on a small basis that 95% of the people that buy coaching courses or business books, for instance, never crack it open, which is astonishing to me, right? I bought into a business a few years ago. It was a local RIA, and I asked the owner, how many of your coaching students actually bought a property, and she said, yeah, about 4 or 5%. And I was astonished. And so I got curious and I dove in and called, every single one of the folks hey, how's it going? Where's your, where are you on your journey of in terms of real estate investing? And yeah, it was true. Almost 95% of the folks of 600 people who spent 12 weeks and thousands of dollars hadn't done a darn thing, right? And
Yep.
the reason being, I got three basic answers, right? Oh, I don't know where to find the money. Oh, I don't know where to find the deals. Oh, I've got so many responsibilities that I don't have time. Right. And, when you kind of dig into those responses, I found that, most people are just afraid, and that's okay. Right. And, one of the things that you said really resonated with me, and I wholeheartedly agree with it, is that, the difference between being a dreamer and being an entrepreneur is action. Right. The only way, you're never going to know everything. There's no way. It's impossible. And I know this because I'm wired that way, and it's something that I battle every day. And the fact is that the only way you're going to move forward is to actually move forward, right? You've got head first, go in, make your 10 decisions, pray that you get 2 of them right, and that you can fix, a portion of the other 8 and move on. So
really I'll give some really actionable advice as we wind this thing down. Action is the key. But look, if you're setting goals and you're trying to conquer, you build a $20 million real estate portfolio, you're trying to raise $10 million for a startup, you're trying to change the world, you're trying to maybe you're looking around social media and you're comparing yourself to other people.
Yeah. Don't do that.
If you set really high goals and really steep cliffs to jump off of course it's even more scary. The key to all of this, Ed, the key to all of this is starting really small, starting low stakes, starting not that scary, setting really achievable goals, and just jumping in when the stakes are low. Like, do something that's really boring, really small to get going. Because business, as we know, is about momentum. It's all about momentum. 12 years ago, when we founded my company, I was in a college dorm or a college apartment, and I had a car and a couple boxes, and I stored some boxes in my apartment, and we made money from day one. I would have had the goal if I was reading Elon Musk's biography and I was like, I want to be an entrepreneur and I was going to go change the world with a new business idea, I would have done it for a couple of years, failed, and went and got a job.
Yep.
Instead, I put one foot in front of the other, didn't take any crazy risk, went out and made a little bit of cash. The next year, my capital, my network, the 3 things that you really need to grow a business, which is skills, capital, and a network, all 3 of those were a little bit better, and I did a little bit more. Fast forward 5 years, and oh my gosh, now I got some real skill. I got a little bit of capital, and my network has grown even more. So I know more people, and I know more. The amount of people in my web that are all helping each other is bigger. I can do even bigger things and better things 5 years later. So yes, it's fearful, and yes, taking action is hard. You don't have to go try to conquer the world. And as a matter of fact, that's a way to actually fail.
Yeah, hit singles.
Go out, do a little bit, put one foot in front of the other, make little things. The problem is, like, nobody's willing to do work now and get paid for it 5 years later. I did that first building. We started that first building, planning for it 2014. Broke ground in 2015, got it open in early 2017. I made my first dollar from that in 2019. 5 years.
Delayed gratification.
5 years. It's really hard, and it seems unsurmountable. And when you're starting and you got nothing, you got no network, you got no capital, you got no skill, it all seems totally insurmountable. It seems like a mountain that cannot be climbed. What I'm going to encourage people to do, what the main takeaway of this should be, is like, just lower your goalpost, move the goalpost closer to you, start taking steps and take little small risks. Maybe you're house hacking, maybe you're getting that first duplex, you're starting a little entrepreneurial endeavor to start to build some capital. You're going to go underwrite a small building. You're going to go try to buy a $80,000 rental property in your town and get it on Section 8, something to get the ball rolling down the hill.
Yep. Start, as I always say, hit singles, right? Be okay with hitting singles, and then eventually you'll hit doubles. And every once in a while, one of those doubles will turn into a triple, and then, and it just snowballs, right? So, hey, Nick, I know we have a hard stop coming up. So I wanted to thank you so much for your time and your experience, and, sharing your wisdom and your lessons learned. I'm grateful. So if people want to learn more about you, what is the best way for you for them to get in touch with you?
So if you like listening to podcasts, I have the Nick Huber Show and Sweaty Startup. The Nick Huber Show is about real estate. Sweaty Startup is about entrepreneurship and management. And I have a newsletter that I write every week that I spend a lot of time on. If you go to sweatystartup.com, you can subscribe to my newsletter. It's all management, entrepreneurship, wealth building, and real estate related. And then, I tweet my thoughts all day long on Twitter. @Sweaty Startup.
Yeah, and as a subscriber to your newsletter, I can't recommend it enough. It's absolute gold every day, every week. I learn something new. So, and I've been doing this a long time. So, even an old dog like me can learn new stuff. So Nick, thanks so much for your time today. It's really good to see you, my friend, and we'll look forward to stalking you more on Twitter.
Ed, keep up the great work. I love what you're doing too and spreading the message. And I'm sure we'll have this conversation again. So I really appreciate it.
I'm really looking forward to that. Thanks.
All right, bye.
This has been the Real Estate Underground podcast. Thank you so much for listening. Don't forget to rate, review, and subscribe. It helps us grow. Until next time, happy investing.